Good evening. It's Vijay here. Today is Sunday, 14 December 2025. Welcome to Reflections on a Sunday, where we discuss larger issues than day to day movements of the capital markets. Last few days, a lot of people have been asking me that, when will FIs come? People generally believe that December is a time when FIs go back and they do not come in December in any big manner. And from January onwards, when allocations come, FIs will come in plenty. Now, sorry to say, for the optimists and the people who are expecting that it is not as easy as it seems, that FIs will go away in December and come back in plenty in January. So this question has to be answered at various levels. So I'm just trying to, see what are the reasons why FIs are selling continuously in the Indian share market. Because that is first you need to understand before we think of when will they come back. I'm also sorry to say that a lot of fund managers, especially the big fund managers, are thinking FIs have to come to India because India is too big a market. India is competing with China. India is a superpower, and all that. You see, basically they have been proven wrong time and again. Yet they continue to be given an audience by the TV channels where they keep on mentioning the same thing. Okay, just yesterday there was one news item which said FIS sold 110 crores of equities every trading hour in 2025. That's huge. They're constantly selling. Every hour they're selling 110 crores on any day when the markets are open in 2025. When so many good things have happened, yet FIs have continued to sell. Now, if this is not new, as I keep saying, this is not new. If you go back and see FIIs, I would just say you take from the last 5 years, for instance. Okay, just 5 years. You see, this is FI net purchase, net sales. So 2025, they have sold about 2,82,000. This is a 1 week old. This data is from my friend Vipin, who has collected this data. Thank you, Vipin, for that. And you look at DIs have been purchasing 728, whereas FI has sold about 2,82,000 crores till last week. In fact, in addition, it is about 2,92,000 crores. Probably they will end up selling 3 lakh crores, which will be like equivalent to last year. In 2024 also, they sold about 3 lakh crores. So these 2 years alone, 6 lakh crores has been sold. In 2023, they have not done that much, but they're still sellers. 2022, they sold 2 lakh 78,000 crores, big amount. 2021, they sold about 92,000 and odd crores. So in the last 5 years, 515 they have sold. So where is the expectations that they will definitely come in 2026? I am not able to see because you had the Indian markets at real bargain levels in 21, in 22 and in 23. Yet you had FI selling in 22 and 23. So if you say 24 and 25 Indian markets are overpriced and they've sold, if you use that logic, then why were they selling 2,78,000 crores when the markets were down? And 2022 was a good time, especially in the first 6 months, a good time for FIs to buy because the prices were low. You must recollect that Nifty was at around 15,200 in June of 2022. So FIs have no interest in India. We have to accept that. However hard the fact is, FIs are not expected to come back in 2026 based on what we have seen in the last 5 years. In fact, in the last 11 years, they have sold in 8 out of the 11 years. So I do not expect anything, or one should not be expecting anything. Now, you see, even one other thing which FIs look at, before we come to that, there's a very interesting news item which came is IMF has changed India's forex classification to crawl-like arrangement. Basically, what it's saying is that RBI is trying to intervene in a manner which is not very good. So FIs, after all, forex is from FIs, right? So now let's look at Rupee, for instance. FIs have to look at what Rupee has been doing from the last 11 years. Take 2014 when it was about 60 rupees 95 paise, about 61. Then it came down to 66, 67. Then it strengthened for 1 year, 64.94. Then constantly 70, 72, 74, 75. 81. In the last 3 years, you see, from 75 dropped to 81, 81 dropped to 84, and now it has gone to 90, and there is no sign of stopping. So, if an FII comes into India, at, let's say at last year, okay, at 84, and today his value of investment is already gone by about close to 8%. Even if the share price is the same level, the FII is losing 8% just because currency has depreciated. And if he has bought 4 years ago at 75, he has lost about 20%. The market might have gone up from 22, 21, 22, but he's losing at the same price about 25%. Markets, even if they go 30%, that means he's making only 5% in 4 years. So tell me, why would FIs even think of coming? Now, people say the rupee. Rupee is weakening because of these reasons. High crude oil prices. It is not so. The crude oil has been coming down. Trade deficit. Trade deficit is one thing which has been steady. So that is not the reason why rupee should come down. Foreign investment outflows. That is probably the reason why rupee is weakening. Take higher US interest rates in US have been coming down, so no cause for rupee to weaken. High inflation in India is low, so no cause for rupee to weaken. RBI buys dollars, that is on and off, so there's nothing big there. And political instability, actually we have a very stable government, yet rupee has come down. So it's primarily because of the foreign investment outflows, which is primarily because of the market is not considered inexpensive or worthwhile index, worthwhile investing. Now you look at what is happening to the dollar. Generally, if rupee has weakened, then dollar should have strengthened. Generally, this is a DXY index. Of course, rupee is not in the basket in the DXY index. If you look at it, the dollar has not strengthened at all in the last 1 year or 2 years. If you take from 20 to 25, see in the last 4 or 5 years, dollar has been stuck between 100 and 114. So dollar has actually been weakening, and rupee also has been weakening, which is a very very strange thing. The FIs also will know that huge amounts of FPOs and IPOs are coming and sucking out the liquidity in the market. On one side, the promoters and the third force is selling, and on another side, rupee is weakening. Then why would the FIs want to come to India? It just doesn't make any sense, especially when they're going to lose on this on the exchange rate. Now you see, we our politicians, for instance, you heard about this. The finance minister said rupee is not falling, dollar is strengthening. That is not true because the previous data clearly shows that this data is from 2005 to 9. This 2005 to 9, around 9 it was DXY 70. Now it is 99. But if you look at from last year, from 114 it has come down to 99. So dollar is weakened across all currencies, and rupee is weakening, and we are saying no, rupee is not falling because of it not falling. Actually, dollar is strengthening. It is a complete lie. But the problem in India is nobody questions the powers that be, and because we accept whatever the government says, then you see we will end up losing money. Now, other day I saw that rupee hits a record low of 1.4 against Afghani currency. Now, Afghanistan is a country which has hardly any economic activity. It is one of the worst countries economically in the world. We have lost, we are now, it is a record low 1.4 against Afghan currency. If you look at it from the last, say, 1 year, rupee has fallen 25%. Rupee has fallen 25% against the Afghani currency. If we are not able to beat Afghanistan, or rather, our rupee is not strengthening against Afghanistan, then where is the question of superpower? I'm sorry, I'm sounding pessimistic, but one has to be realistic. That is why slowly and steadily I'm moving from extreme bullishness to 80% bullishness. Now I'll become 60% bullishness next year, next few days, and finally I probably will become full bear by February, March. But what we are doing is we are putting money into metal stocks or stocks like some pharma, and which are not going to get affected by what is happening on the rupee. And metal stocks are dependent on what happens globally. So it is very difficult now for a person to invest and hope things will get better next year. I think we have to be very very careful when we get into next year, rather than hoping that FIs will come and buy, as most of the mutual fund managers are telling lies. They are lying because FIs are not bought in the last 5 years. So why should they come in 2026, especially when the rupee is lower? That is the question we should ask ourselves. But I'll leave you on a cheerful note. It is not necessary that all the shares the FIs are selling. You take Amber, they have increased. AIS, Jyoti, Sai Hotels, Sai Hospitals, HCG, Clean Science, Aditya Vision, MTAR, FV2, this retail. Then, so there are some stocks, Siemens, they have increased. So there are some stocks. We have to go and see their quarterly numbers and see where the FIs have increased, despite rupee weakening and despite the liquidity being sucked out. If FIs are investing, then they must have some conviction there, which may be an interesting. These may be interesting scripts to look at. But otherwise, to be honest, I am really very disappointed. And I think we will get disappointed because you see, there is no reason. I am not able to see any reason for FIIs. If I was a fund manager and go and make a presentation to FIIs, I really will not have any reasons. I can't even tell them that our Indian markets are cheap. They are not cheap. Korean markets are cheaper than India. China is cheaper than India. Brazil is cheaper than India. Brazil is a resource market, cheaper than India. Many markets are cheaper than India. Even US is at par with India. It's not that US is very expensive and they'll come to India. So one has to be very careful. I keep repeating this, and I'm becoming more and more skeptical of what will happen in 2026. I feel the first quarter at best market will peak out because there is a Reliance IPO which is coming through their Geo, so they may hold up the market till then. But after that, I'm not expecting much thing to happen next year after March. And then many of the mid cap, small cap, micro cap, they've already gone into below 200 EMA. So that is already we are there in a bear market. So I would exercise caution. We are moving more of our concentration is moving more to metals and something to pharma and something to PSU banks, and not really doing any adventure now on. So I leave you with this. Think about it, what you should do. Please enjoy the match, and whatever you do, I hope it is successful for joining.